Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, March 2nd, 2009. Well, as we get into today's market activity, folks, what I want to talk a little bit about is discussing where this market's going today. What are we seeing today? What are the reasons behind what we're seeing today? Because we're seeing more selling. I mean, there's no doubt in my mind you're seeing continued selling. And really, what you want to focus on, and you're looking at the 60-minute chart right now, and how ugly is this drop really from I would say that would be the high of the day on Friday and right down here to the lows of the day where we currently are trading. But really, what's the underlying issues that this market can't get over? I can name some of them. First of all, we know the financial issue is out there, but it's more in depth than that. And before we go into these key levels that I've drawn on my chart here, it's very important to understand that it's not that the market is hurting because of the financial issues as a whole. It's more that we don't know where to price these current assets on the financials books. There's no market for them. There's questions whether it's 15 cents on the dollar, 20 cents on the dollar, 25 cents. There's just that uncertainty behind it. All right. First of all, part of the uncertainty obviously is if they get priced at a certain level, a lot of these banks are insolvent. I mean, that's part of it right there. The other issue is the government. The government continues to attempt to give clarity, but has no possible clue in the world. No clue at all. So in essence, guys, the clarity issue remains in this market, and it's at the heart of the market. I mean, needless to say, we're in an ugly recession right now. That's part of it as well. But the fact of the matter is, if the market knew, let's say the market knew that in 5 months or 8 months or 12 months from now, but the bottom would be in, all the junk would be off the financial books assets, and things would be moving forward, you'd actually see a positive move in this market, no doubt. All right, it doesn't matter when it's going to happen. Obviously, if someone said 5 years, then that's an issue. But assuming that it's in the next 12 to 18 months or earlier, I think that's the key. And what you're seeing today, folks, in this market is just some ugly selling. I mean, look at this. We've gapped lower, rallied to this trend line. And by the way, these trend lines go all the way back. All the way back. Here's where they come from. In fact, as you're looking all the way back on them, and you can just continue to see where they come from. A bunch of them come from the highs going back to the 24th on that little bit of a reversal rally on Bernanke. This is when Bernanke came out last week and kind of gave the market a tiny bit of clarity. But you know what? As soon as that happens, then for instance, AIG this morning, AIG getting another 30 billion, and it's like a black hole, and the market realizes this. So it's which one's the worst evil in my book. Is it better to let it be another Lehman and give the market a near-term shock? Which, yes, it would be a bad shock if they let some of these companies go under, but it would be so short. It would be short-lived, in my opinion. You'd get a downward move, huge move, probably a flush out, and then all of a sudden it would be done. And at that point, you can get back to it. Or is it better that the government kind of just gives them 30 billion every month, eats away our tax dollars, and ultimately it's a black hole where it's just going to continue to eat that up? I mean, you're literally talking about possibility of trillions of dollars needed out there more than what's already been in. So, I mean, you're talking about derivatives, you're talking about, I mean, there's just so much junk, guys, out there. But enough of me preaching. What you guys are seeing today is a gap lower, a little bit of a move up, and look at how we pierced this upper resistance line. And again, this is coming from the low going back to that 24th, the high on the 24th to this low. And again, you want to have these lines drawn on your charts, obviously, because look at how key they are today. I mean, you have this literally pushing up. It tries to break it 3 candles in a row, cannot do that, right into 10 o'clock. 10 o'clock approximately our high right here on this candle, and then all of a sudden reversal, and the market has just sold off all the way down now. And this is one of the more ugly days. Why? Because it's not a if you're short, it's a great day, and you can just hold and hold and hold if you're a swing trade short. As a day trader, it's not necessarily a good day. Why? Because there's no volatility. Look at the market as it kind of just continues to dribble down. You get one green candle there. Then the next green candle doesn't come till, right around lunchtime. And then the next one doesn't come till here. Finally, you actually touch this lower trend line. And look at how this beautiful lower trend line gets pierced. And then the market's really gone sideways, though it is starting to roll over a little bit here. Now, that's telling you one thing. This trend line is a very, very key trend line. Also, look at the 20 moving average. Remember, always keep your moving averages. We keep the 20, 50, and 200 in our charts. And when that 20 kind of comes down, and notice it's starting to put some pressure on the downside. This is resistance, and as this moves lower to price, it's going to put resistance. So you have this trend line, and this 20 moving average both sloping down. But the reality of the situation is I have these lines drawn in up here unless we see some major news announcement, which is always possible, and that's why it's such a hard market to short. And I want to make that clear because at any moment you could see a reversal like a Ben Bernanke rally, or a week, 2 weeks ago from Friday, actually a week ago from last Friday, you saw that monster squeeze in the markets. You're on the tip of an iceberg that you could fall off based on a squeeze pattern by any announcement from the government. That makes it almost impossible to be short. So you can't be long this market. You can't be short. What are you left with? Virtually sitting on the sidelines. Now, there are a couple things I've been accumulating. Those in the chat room know. Those that subscribe to our premium research center will obviously know as well in the nightly videos when I talk to them about it. But for those of you out there, there are some things out there that you can start to look to accumulate, but you got to be careful. You got to keep stops. You got to always be cautious. But I do encourage you, those of you that want to really know what the pro traders are accumulating, you can get your lists, you can get your videos, your technical analysis videos of the daily charts. I just go over the intraday here, the intraday 10 and 60, but all the daily videos go over the hardcore analysis of the daily charts, the weekly charts of all that stuff, because that'll tell you where you're going to go later this week. That'll tell you where you're going to go next week, and that's why it's so important. So again, what you're seeing is a little bid coming in this market here. This is live. I'm doing this video live as we speak, watching this market. And just to go over a couple odds and ends, folks, I mean, this market is virtually getting crushed today again. 3% across the boards. You have the Dow down about 240 on the day, the NASDAQ down 45 to 46 points, and the S&P lower by about 30 points. S&P's down 4%, the NASDAQ and Dow down about 3.4% each. Now, again, you're going to watch for this, guys. You have a couple levels. Your intraday, those of you that are intraday want to kind of test this out. This is our methodology, our technical trendline analysis that we focus on, which has really led us to amazing calls over the past couple of years and so forth in understanding that the market was going to collapse like it did, then understanding where the bounces are going to come in and positioning yourself. You got to look at the 20 moving average first and foremost. Notice how this little rim is now forming a little resistance line. See this top? From this pivot point right here, you have a pivot where they attempted to bounce the market and you've gone sideways, now slowly looking like you might be breaking down. Take the high point there, stretch it right over. That's going to give you a resistance line. Minor, it's not a huge resistance line, but in this market, just how hard it is to bounce, that might be pretty big. So you're taking that line, draw it right across. In addition, 20 moving average will always be resistance, especially the first hit of your 20 moving average. Always remember that, guys. Always, always remember that. In addition, it looks like you're trying to build a little bit of minor support right here. It doesn't look like much, but you can see the low of this candle drawn straight across, and you're trying to hold those lows. So all of a sudden, you're in this channel, and you want to see which way you break. If you break below the channel, you're going to this lower trend line, which is sloping down. Wherever it may be when you break out, that's where you're going to go. No doubt about it, guys. If you happen to break up and take out the 20 moving average in this trend line, it looks like this secondary trend line will be the next one to get hit, which is exactly the same trend line that we met resistance on here. If that one gets taken out, then you're looking at this approximate trend line as the high of the day, approximate high of the day, which will be the next level to watch on the upside. So these are all your levels, guys. These are all your intraday levels. Let's go to the 60-minute, quickly touch on the 60-minute. I showed this in the beginning of the video, how ugly it is, and it just remains ugly. I mean, you can't even, the trend lines are as follows. You can see you're basically have an underlying trend line here, and I'm going to draw this in very briefly, not very hard, but or accurate, if I could say. But this lower level, look at how you touched, hit, and so forth. This is your ultimate lower trend line. You get down there, guys, and that may be where we have to go. If we do get down there, that's ugly, but at the same time, that would be major support. Look at how good support this line has been all the way down on your 60 minutes. So focus on that one. Very, very important. On the upside, I mean, you're really looking at gap fill, which would be right here. I mean, that's one of them right here. I mean, gap fill on your upside, gap window. Or today's gap fill, I should say. The ultimate gap fill, though, from here would be up here, and this would be your next resistance line. Notice how it coincides with the low from this point as well. Double bottom low. You can even extend this all the way over, and it actually comes back. If you go back very far, it comes back to other key levels going back to November. Some lower levels, some lower trend lines, and so forth. But in any case, these are your levels. This lower trend line on your 60-minute will be key support. On the upside, gap fill for today, which is basically the highs of the day, would be first, and then ultimate gap fill right here of this gap would be secondary. All right. And then after that, obviously the 20 moving average, 50, 200, and there's a bunch of other stuff up here. But let's not get ahead of ourselves. As of now, this market's getting pounded. Looks like it wants to get continually pounded. Although, again, as I always say, never fear. Come 2:30, 3 o'clock, 3:30, oftentimes you'll see announcements from the government that'll try and squeeze this market. We'll see if that happens today. I personally, until we get above some key levels here on the intraday, until we break out of this channel and get above this 20 moving average, in my opinion, you got to look for more downside in this market. Other than that, very near-term oversold market, no doubt about it. All right, guys, come join the premium services at InTheMoneyStocks.com, Research Center, chat room, swing trade alerts, webinar. We'll talk to you tomorrow in the intraday chat.